Hey, what's up, my friend? So I'm sure you can agree, right, that these days you can learn trading online for free, right? You've got things like, YouTube, ChatGPT, blog posts, TikTok, Instagram, and whatnot. But still, most traders fail. Why is that? Well, if you ask me, it's because of this. Information overload. And when you get information overload, you get conflicting information, right? This indicator says buy, and then the other indicator says sells. And then the price action says stay out. What do you do? And then you get analysis paralysis. Should I buy? Should I sell? Maybe I toss a coin, ask my girlfriend, ask my wife. Beep. So if I were in your shoes right now, I understand how overwhelming this can be. So this is why, right? If I were to start trading all over again, right? Here's how I would approach trading. First, I would do this. Number one, risk management. So here's the thing, right? There are many different types of traders out there who can profit from the markets. You've got options trader, price action trader, systems trader, swing trader, crypto trader, and they can trade the markets in different manner. But there's one thing that all of them have in common. Do you know what's that? That's it, risk management, yeah? Because you can have the best trading system out there, but without proper risk management, you will still lose despite having the best system out there. Let me prove it to you. So here's an example, right? So let's say you have a trading system that has a 50% winning rate. And on average, right, you achieve a 1 to 2 risk reward ratio. This means if you risk $1 and you're right, you win $2. So 2 times your initial risk. And let's say, your next 8 trades, right, go something along these lines, right, where, L stands for losing trade, lose, and then the next 4 trades are winner. Now, let me show you the importance of risk management. As you can tell, this over here, this so-called system that I've, just shared with you, it's a profitable one. In the long run, you will make money, okay? And let's say there are 2 traders, John and Sally, okay? So let's say John and Sally, they both have $1,000 trading account to start with. And let's say John is, a guy, macho, let's go home, go big or go home kind of trader. And let's say he risked $500 on each trade. Okay, so you can say first trade is a losing trade, so minus 500. Second trade is also a losing trade, minus 500. You can tell that after 2 trades, John has blown up his account. On the other hand, let's talk about Sally. She's more conservative, right? She wants to, trade for the long run, the next 10, 20, 30 years, instead of risking $500 a trade. Sally only risked, let's say, $20, right? 2% of her account. So clearly the first 4 trades are loser, minus 20, minus 20, minus 20, minus 20. And then the next 4 trades, they are winners, winning trades for her. And she didn't get $20 for each trade. In fact, she got $40 return for each trade because it's a 1 to 2 risk reward ratio. Her winners are 2 times the size of her losses. So it's going to be plus 40, plus 40, plus 40, and then plus 40. And if you look at it net, right, how much did Sally make? So the total loss is minus $80. Her total profit is $160, right? So if you look at all her total profits here, it's about $160. Her total loss from here to here, it's $80. So she has a net profit of $80 after these 8 trades. And $80 of $1,000, that's about 8% gain. So can you see the difference? 2 traders using the same trading system. One blew up his account and one made a net profit of 8%. So this is the importance of risk management. And here's the thing, right, about risk management is that this is one of the lowest hanging fruit that you can tackle. It doesn't require, rocket science to understand. In fact, if you just spend 45 minutes to an hour, you will be able to master risk management in no time. It's just simple math. I think 10 or 12-year-old kid will be able to do it. And this aspect of risk management will be relevant to you, will be essential to you the day you start trading and the day you end your trading career, right? Maybe you make too much money and you want to quit trading. Yeah, risk management will be there with you every step of the way. And you can't say the same for the strategies, the patterns, the stuff that you learn, because sometimes along the way you might change strategy and stuff like that. But risk management, you won't be changing it. You will be, sticking with it from the day you start trading and the day you quit trading. So don't neglect this. Focus on this at the get-go. Next, expose yourself. No, I don't mean taking out your t-shirt and showing me your chest, right? But expose yourself means go out there and learn as much as possible as you can about trading. Because here's the thing, right? As a new trader, you do not know what you do not know. Okay, let me repeat that once again. You do not know what you do not know. So go out there, expose yourself, and learn as much as you can about trading. You know, there are so many things that you can study. You know, things like, for example, trading strategies. You can study things like, you know, swing trading, trend following, position trading, day trading, and much more. Right? So go out there and learn about all these different strategies out there. Or if you want to know what type of trading methods are available, you have, you know, price action trading, options trading, systems trading, etc. So you can use things like, you know, YouTube, Google, read books, whatever, you know, floats your boat, and just expose yourself. And one mistake that many traders make, including myself, is that there is no best trading strategy out there. So don't have that preconceived notion that, oh, price action trading, you know, it doesn't rely on lagging indicators, this is the best approach, right? Nothing else comes close. No, that's not true, right? Every trading methodology, every trading strategy, it has their pros and cons, right? After, you know, being in this business for more than 10 over years, everything has pros and cons. And the question is, are you able to accept the downside, the cons that comes along with the strategy or method? So this is where, you know, people say, you know, finding a strategy that suits your personality. So the thing is, you must expose yourself out there to see what's available before you can find something that suits you, rather than, you know, having someone, you know, shove a method, a strategy down your throat and you and choke, and, you know, you realize it's not meant for you. So no, right? So once you master risk management, once you have, you know, learned the art of not blowing up your trading account, then go out there, learn all the different trading styles and approaches out there. Because even if you were to hurt yourself, maybe the strategy doesn't work, guess what? Your risk management will contain the downside. Your losses won't be too monumental to the point where you blow up your account. So this is why I put risk management first. Once you nail that down, then we talk about the methods, the strategies that comes along with it. Yeah, so go out there, expose yourself, and these are some keywords and ideas that you can study further, right, if you do not know where to start. Yeah. Number 3, 1, 2, 3, 1, 2, 3. Focus on a strategy. So you would, at this point, right, expose yourself to different strategies, techniques, patterns, and whatnot. Mine might be, you know, all over the place. So this is where I need you to focus, right? Focus. So how do you focus? How do you know which strategy to go with? For starters, right, once you learn quite a bit about trading, you would start to gravitate towards a certain trading strategy or methodology. It will naturally come, right? You will tend to resonate with something. Something will make more sense to you compared to the other stuff. So once you sense that, right, it's time to focus, okay? So how do you focus on a trading strategy? So this is where I need you to extract the concepts of the strategy that you want to focus on. So let me give you an example. There are many types of trading strategies out there. Trend following, counter trend trading, mean reversion trading, blah, blah, blah. So let's say you want to go with a mean reversion trading strategy, right? So for people who trade a mean reversion trading strategy for the stock market, right, the concepts behind it, right, is something like this, right? Just 3 simple things. Number 1, you're going to find stocks that are in an uptrend. Identify stocks that are in an uptrend. You're going to buy on a pullback, and then you're going to sell the rally. That is the entire concept behind a mean reversion stock trading strategy. So it actually looks something like this. Price goes up, comes down, goes up, comes down, pulls back, you buy, okay? And then if you have a bounce, boop, you sell the rally and, you know, capture it. One small bounce up higher. And if you want to learn more about mean reversion trading strategy for the stock market, right, this is a trading system, right, I actually teach in my live webinar, Stock Trading Secrets. You can see that this system, using the same concept which I've just shared with you earlier, the annual return is about 18.46%, right? And we have tested it over the last about 24 years, right? And if you want to learn this system, right, with the exact trading rules, so what you can do is just go down to this over here, right? tradingwithrayner.com/STS, right? Stock Trading Secrets over here. tradingwithrayner.com/STS, right? So this webinar, I'll walk you through the exact mean reversion trading strategy, when to enter, when to sell, the rules, the chart examples behind it, and all the fun stuff. So if you can make it for this webinar, highly encourage you to join so we can go into more details. Yeah, but for now, let's move on. Okay, so also I want to talk about, focusing on a strategy, right? By focusing on a strategy, you also get less conflict. You feel less conflicted. Why is that? All right, let me explain why. Most conflicts in trading, right, they arise because of different methodologies, right? You have heard the saying, like value investor, they look to buy low and sell high. But at the same time, momentum trader, trend follower, they look to buy high and sell higher. So now the question is, How do you deal with this conflict? This guy, Rayner tells me to buy low, sell high. This one says he can make more money buying high, selling high. Who should I follow? Who is right? Who is wrong? Well, the question is this. What are you focusing on? Are you focusing on trying to be a value investor, or are you focusing on trying to be a momentum trader? Once you know what's your focus, then you should follow the approach that's aligned with your focus and ignore everything else. Everything else is noise. Make sense? So this is the importance of focusing, because once you can focus on a strategy, then you realize that all this conflicting information just kind of like melt away, because you really know what you're focusing on. Everything else outside of it is noise. Okay? And another thing to add, right, when we're talking about strategy, is this, right? When you choose a strategy or a methodology, it has to suit your circumstance. Let's say you're working full-time job, right? One day, 8, 10, 12 hours a day. Maybe you're an auditor, you're doing 14, 16 hours a day. Then it doesn't make sense to be a day trader where you need to be glued to the screen, for a few hours each day. Yeah, so you need to find a strategy that suits your lifestyle, that suits your circumstance as well. Okay? Next, we are going to develop the strategy. So once you've understood and extracted the concepts of a strategy that you want to focus on, we're going to take that concepts and turn it into a trading strategy that we can, work on, right? So how do you take a concepts and then translate it into a strategy? I'll show you how. So for every trading strategy, or most trading strategies, it needs to answer these 4 questions. Number 1, what is the market conditions that you'll be trading? Number 2, what is the entry trigger that gets you into a trade? Number 3, what's the exit, right? This could mean your stop loss and your take profit level. And number 4, your risk management. So let me use a document over here, right, and kind of like, walk you through this example, right? Because I think you guys might be a little bit confused here. So the few things that we need, right? Let's call it the MEER. Okay, market conditions, entry trigger, exit, and risk management. So let's use the mean reversion concepts, the mean reversion trading system concepts that we talked about earlier. So we are looking for identify stocks in an uptrend, buy on the pullback, sell on the rally. Okay, so you can see this is the concepts behind the mean reversion trading system. And there are a few things that we still need to fill in the gaps, right, which you'll see shortly. But first, let's talk about market conditions. So you know that for this particular strategy, the type of market conditions that we are trading is stocks that are in an uptrend. So how do we define an uptrend? A few ways you can go about it. For starters, I think if the stock price is above the 200-day moving average, then look for buying opportunities. Okay, I think that's one way to go about it. Another way you can go is if the stock price forms a series of higher highs and lows, then look for buying opportunities, because that can also be meaning that the stock is in an uptrend. And if you want to be more specific, right, it has to be on the daily time frame or whatever time frame that you are trading on. Okay, so this classifies the market conditions. And in fact, I think you're also looking for a buying on a pullback, right? So this can also, the pullback part can be let's over here, right? Let's say entry, right? You're looking to buy on a pullback. Okay, so how do we specify this criteria? You can say that if the stock price makes a 5-day low, right, buy. For example, if the stock price makes a new 5-day low, you can say buy. If you want to be more detailed, right, you can say if the stock price, drops, I mean, this is another way of writing this, drops 10% over the last 3 days, for example, buy. So these are all different ways to define the pullback. And of course, if you really want to be specific, right, you can say things like, let's take things a step further, right? If the stock price drops 10% over the last 3 days, this means that the pullback has already been formed. And maybe for discretionary traders, you want to look for confirmation, right? Then wait for a higher close, right? Or a hammer or whatever, right? Then buy. So you can see you can specify exactly what you're looking for before you enter. Yeah, so this is how you take a concept and then translate it into a set of rules to trade it. Okay, so this one is the entry. Let's talk about exit, right? So for exit, we are looking to sell on the rally. Okay, so this means how do we take profit? So for example, if the stock price, for example, closes higher, sell. If the stock price, let's say, reaches resistance, sell, right? So these are how you can convert that concept into a set of rules that tells you when to sell. Now, exit is 2 parts, right? Your stop loss and your take profit level. So what about stop loss? For this one, it could be, let's say we put it here, stop loss. If the stock price drops 3 ATR from your entry, sell. Right? So this would cover your stop loss. Yeah. Risk management. Okay, so this one could be as simple as, let's say if you trade stocks, maybe hold maximum of 5 stocks, 20% of capital to each stock. That's one way of going about it. Or for those of you who have a predefined stop loss in place, you can say 2% max stop loss, right, from entry to SL. So there are different ways to again define your risk management. But hopefully by now, right, you understand how we actually take the concepts, these concepts that I shared with you earlier, right, and translate it into a set of rules that you can then move on to the next step. Now, the final thing is to test the trading strategy that you've developed. Because here's the thing, right? You have no idea whether a trading strategy will work or not, right? Nobody is going to tell you. You have to test it, right? Either through backtesting or forward testing, or maybe working with others, right, to help you come up with conclusive data to tell you whether something works or not. So there are generally 2 ways to test, right? Number one is what we call backtesting. This means that you are testing a trading strategy across historical data, across the past data, and see how it has performed over time. It's kind of like, you know, you go on a date, meet this girl for the first time. You're not going to marry her on the first date, but you're digging questions from her, right? You know, her past. How does she handle her money? How does she handle her relationship? How many ex she has? You know, what kind of family background she has? That's kind of like backtesting, right? Your partner, right? To see whether she'll be suitable wife material in the future. Yeah, so for backtesting, right? For in the context of trading, the advantage is that it's fast. You get feedback a lot faster because, you know, if you can, let's say, do programming, or you can work with someone, right? You can, you know, test trading systems, you know, many trading systems, right, in a short period of time. Yeah, but the disadvantage of backtesting is that usually for those people who are backtesting systematic trading systems, right, you require programming knowledge, and it's something that I think not many traders would have it, right? But you can always hire someone to help you with it. Next one is forward testing. It's basically testing a strategy in the live markets and see how it has, you know, performed over time. Again, kind of like, you know, meeting the girl for the first time. You do not know her past, but, you know, guess what? Let's hang out for the next 3 to 6 months, the next 1 year, and see how she's like. You know, let me travel with her. Let me see her sleeping, her eating, her habits. Can I, you know, deal with it, right? How does she squeeze the toothpaste? Does it, you know, annoy me? Does she squeeze it from the top or the bottom or the middle? Yeah, that's forward testing. So advantage is that, you know, for in the context of trading, it's free. Yeah, forward testing, usually you just need some charts. Microsoft Excel will be able to get the job done. Disadvantage is that forward testing is slow, right? You need the trade to happen in real time, and it takes longer compared to someone who is backtesting. Yeah. So from the testing, right, you will then know whether a trading strategy works or not, right? And if it works, great, right? You now have a trading strategy that you can stick with for a long time, and this helps build your confidence in your strategy and yourself. And what if the strategy doesn't work? Then you go back to the drawing board, right? Going back to refining your strategy, right? To see, you know, how you can improve on things, you know, finding out, you know, where are the main losses coming in? Is it because, you know, the losses are too big, that's why it's eating a lot of your profits, or maybe you're trading in a poor market condition, etc., etc. So it's only through the testing can you get feedback, and from that feedback can you then refine your strategy further to improve on it and make it work in the long run. Yeah, and of course this process can be tedious, can be difficult. So this is why again, if you want a kind of like a shortcut, or you want a proven trading system that works, you can join me at this upcoming webinar called Stock Trading Secrets. Right, I'll be happy to share with you this mean reversion trading system. You can use it as a foundation to build your own trading strategy, so you can, you know, save time and avoid going around in circles. Right, so if that sounds like something that you'd be interested in, again, the link is at tradingwithrayner.com/STS. I'll also put the link somewhere below this video so you can sign up for it. Okay, and again, right, this video I've purposely given you a high-level overview of how I will go about trading the markets if I'm new to it. So we covered many different components, from, you know, getting exposed, developing a strategy, focusing, etc. So if there's anything that you'd like me to cover in more details, leave in the comment section below so I can check it out and see where or which other areas you guys need help, and I might create a future video that tackles that question of yours. So with that said, I wish you good luck, good trading. I will talk to you soon.